Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 5th, 2024, and we're diving into Equitable Holdings' third quarter earnings report. Joining us is John, Senior Analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Equitable Holdings has just released their Q3 2024 earnings, and there's a lot to unpack, from strong organic growth to strategic capital management.
Revenue and profitability overview. Let's start with the financial highlights. Equitable Holdings reported a net loss of $134 million for the quarter. However, their non-GAAP operating earnings were $501 million, translating to an EPS of $1.53. John, what does this tell us about their profitability?
Despite the net loss, the non-GAAP operating earnings show a robust performance, up from $413 million last year. This indicates strong underlying business operations, particularly when adjusted for notable items. The EPS of $1.53 is a 34% increase from the prior year, reflecting effective cost management and revenue growth.
And their assets under management reached a record $1.0 trillion, a 20% increase year over year. What factors contributed to this growth?
This growth is driven by favorable market conditions and strong new business activity across their segments, particularly in wealth management and asset management, which saw significant net inflows.
Segment performance and strategic initiatives. Equitable Holdings has shown strong performance across its business segments. Can you elaborate on the key drivers for their retirement and wealth management segments?
Absolutely. The retirement segment reported net inflows of $1.7 billion driven by solutions catering to Americans' retirement needs. Wealth management achieved record advisory net inflows of $1.9 billion, supported by advisor headcount growth and increased productivity.
And what about their asset management segment?
Asset management, through AllianceBernstein, reported net inflows of $1.1 billion, with active net inflows of $2.2 billion, primarily from the retail channel. This reflects their strategic focus on expanding their market presence and product offerings.
They also returned $330 million to shareholders. How does this align with their capital management strategy?
This aligns well with their target payout ratio of 60 to 70% of non-GAAP operating earnings. It demonstrates their commitment to delivering shareholder value while maintaining financial flexibility.
Operational efficiencies and future outlook. Looking ahead, Equitable Holdings expects cash generation at the high end of their $1.4 billion to $1.5 billion guidance for 2024. What does this indicate about their operational efficiencies?
This indicates strong operational efficiencies and effective capital management. Their ability to generate cash at the higher end of guidance suggests robust business performance and strategic execution.
They have set ambitious targets for 2027, including $2 billion in annual cash generation and $150 million in net expense savings. How realistic are these goals?
Given their current trajectory and strategic initiatives, these targets seem achievable. Their focus on cost-cutting and optimizing investment income will be crucial in meeting these goals.
Lastly, their book value per share excluding AOCI stands at $26,616. How does this reflect on their financial health?
This reflects a solid financial position, providing a cushion against market volatility and supporting future growth initiatives.
Key takeaways. CEO Mark Pearson highlighted the company's sustained growth momentum and strategic focus. How does leadership view the company's future prospects?
Mark Pearson emphasized their strong business performance and capital generation, which positions them well for future growth. Their strategic focus on expanding market presence and enhancing operational efficiencies is expected to drive long-term value.
As we wrap up, what are the key takeaways for investors considering Equitable Holdings?
Investors should note the company's strong organic growth, effective capital management, and strategic initiatives aimed at enhancing shareholder value. Despite the net loss, their operational performance and future outlook remain positive.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Equitable Holdings performance in the comments below.